Welcome to Bitcoin Escape Plan. Bitcoin is on a massive uptrend right now, and in today's video, we're going to go over the key levels that will act as support or resistance to either keep this rally going or to cut it short in its tracks. Later on in the video, we will go over the higher time frame context so we understand what is happening more broadly than just the short-term picture of the price. And at the very end of the video, I will go over how I have turned my perpetual trade from being 90% in loss to now over 90% in profit. Make sure you watch to the end of the video if you're interested in that. If you're new to the channel, go check out bitcoinescapeplan.com. Every Monday, I release an in-depth newsletter that breaks down all of the key levels and a couple other goodies there if you scroll down in the archive. bitcoinescapeplan.com. Go check it out. A lot more to come very soon. And of course, I do make videos here every Sunday, Monday, Wednesday, and Friday. Let's subscribe. All right, let's get into the video. I'm already subscribed. You need to be subscribed. Okay, so the important levels at the moment that we need to pay attention to, this is going to be the first one right here. This is the middle band, I believe, of the, let's see, I believe that is the more recent. No, that is the elder VWAP. That's the older VWAP. If you don't know what I'm talking about with that, go watch the courses over here. I'll explain in more depth about what those tools actually do. But essentially, it's showing us the anchored price of, or the anchored volume of the price over time. And what we can expect when we see an interaction with the middle band is either confirmation, moving then up to the higher band, or that we're going to see a rejection off of that level that is going to then push us back lower towards the middle band, which is currently at about 60K at the moment. Now, anyone who's been following this channel knows these tools have dramatically shifted recently. I tried to reset it and it's still showing as dramatically higher. Hard to ignore that. It is something definitely to keep in mind on the chart. But those are the two levels that are going to be the most important right now, is the middle band of the elder VWAP and the middle band of the more recent downtrend anchor VWAP. This is the one from 126. This is the one from the lows in 2011. They're telling a very similar story right now. So basically what we are waiting for, and what I personally am waiting for, is a reaction to this range somewhere in here. As you can see, we're starting to see a bit of a pullback now off of, it looks like 79.5. So struggling a little bit to break above 80K. I would hesitate to say that is a significant failure at the moment. We kind of have to wait for the 79K Fibonacci pivot to print, and we have 2 more hours until it does so. But yeah, this is not something I would short yet. I would be looking for a short somewhere in here more likely, and that would be a temporary one. I'm not positive that this momentum is done yet. And again, I will go over the trading segment at the end of the video. So the most important levels right now are this middle band of the elder VWAP, currently sitting at about 80.2K, and then the middle band of the downtrend anchored VWAP, which is about 83.5K. And again, I would assume price is going to have a strong reaction to one or both of those. It kind of remains to be seen whether we have enough momentum to push beyond it. As I've said many, many times on this channel, we are really waiting until about April 24th. Technically, it can continue to extend out this way and continue to go higher. But at that point, we would have to assume that we have left this downtrend behind and we no longer need to test it. But it is still my baseline hypothesis that we're going to start to break down somewhere in these levels, and that'll bring us down lower. And I'll give you evidence for that on the higher time frame in just a little bit. So the other levels that you need to pay close attention to. So over here, we rose to about 78 point, what is that, the high? 78.4K was about where we rose to last time. So we would want to see that form basically as support. So far, it seems like it is. Again, we would be expecting that retest probably, I would say, within the next 3 hour, or within the next 3-4 hour candles. So potentially a pullback going into the rest of the day, going into the rest of the week. But yeah, there's not very much that's preventing us from going a little bit higher still, and we really don't come into like significant levels in terms of volume until around 86, 87K. And at the moment, what we're doing is really just filling out this anchored volume profile. There's not enough human beings with Bitcoin at these prices for them to have strong emotions about whether the price goes up or down. And we're basically relying on all of these people who bought in 2025 late and afraid, versus all the people who have stepped in recently and started buying, combined with these. This is also a lot of volume from the ETF buyers in 2024. So that's kind of what we have to wait for at the moment, is to see, do these levels form as support? Do these levels form as resistance, or are we able to continue to break higher? So the most important levels, as I said, for me personally, are going to be that 80K and about 83.5K in terms of just the anchor VWAP levels. We do still have to pay attention to 79 and 82 because they're registering as Fibonacci pivots. Pretty much any round number is going to matter when we're at like these levels. I know it's not rocket science, but any level could be the crucial one. I just think that it's going to be somewhere in this range where we need to pay attention, because if we start to have a significant reaction off of one or both of them, it'll be fairly obvious on the chart, and it will start bringing us back down towards other metrics that are important, like for example the 4-hour SMA, which we are currently well above, looks totally fine. So nothing to worry about there. Still bullish until proven otherwise. And again, I am not completely sold on flipping my perpetual trades to shorts until probably a little bit higher into this region. Then I would consider closing the trade, which is great because 90 to 100% profit is plenty, honestly. Don't need to wait that much longer before I can take my money back. So that's what we're looking for in the short term, is a continued reaction to 79K here. It seems to be doing okay at the moment. Again, 2 more hours on this candle to print that. If it's able to hold there, we would expect another retest towards 80K. If it is not, and it needs a more significant breakdown, then we would just want to pay attention to 77.3, 77.2, and again, pay attention to 78.4 as possible support on the way down there. But it could be pretty thin support, since we haven't really hit that since like January, probably February, January. Oh, interesting. This is important, actually. What level is this? 78.8, so $400 higher than that. Regardless, this region is going to be super important, that little last leg there in January. It is still my baseline hypothesis that we're not going to see a price higher in 2026 than this guy right here, 97.9K in January. I think that is going to be the high for the year. Now, it could be wrong. Let's get into the higher time frames. There is a channel that I deeply respect that makes a lot more money than I do, who does think we could potentially continue to go to new all-time highs. I believe when he says that in the videos, he's talking about the stock market in particular, not specifically Bitcoin, but he does use the phrasing new all-time highs for Bitcoin, which is hard for me to rationalize in the bear market year, especially in a bear market year that so far is very much retracing the 4-year cycle. I really have not seen anything to the contrary of that at the moment. So what we would typically expect is, once we've broken down below the monthly SMA, we typically would expect a period of 8 to 12 months before we have another interaction with it. That interaction is not guaranteed bullish. We can chop a little bit before giving it back up. In 2022, it was a significant period of time, 12, 13 months. And then we did recover it and start breaking above it. In 2018 into 2019, it was less pronounced, a shorter period of time, and also it just continued to trend upward, which so far is what we're seeing, is that we're seeing it not start to curve down, but continue to flow up and to the right, which, again, it doesn't really matter if what is going to occur is a reaction and a failure. However, it really just depends on, our cycle has been pulled left. We started breaking the monthly and the weekly earlier than we typically would in a cycle. So there's no reason that we couldn't break back above it earlier as well. We just don't really have a precedent for that happening in the bear market year instead of in the pre-halving year. So that's still what we would expect, is chop and failure that brings us back down. and then inevitably another attempt and failure before we are finally able to break back above it. So a little bit more clear on the weekly time frame, and this is what we've been talking about for several weeks now. The weekly SMA has dropped down to 77K, getting very close to that 76.2K pivot. And as I said in all the previous videos, this is what we've been waiting for. I've been talking about this since January, February. So typically what we would expect to see at this time is a failure off of the weekly SMA. So what are our examples of that? Over here in 2022, we have our initial attempt and failure, a rise, a failure, a rise, a failure. And this one is important because the weekly SMA had broken below the Fibonacci pivot point, which meant that the weekly SMA is what we initially had to fight through. And then that 47.6K Fibonacci pivot point actually acted as resistance instead of confirmation of support. There is a possibility that we are seeing the flip side of that now, with us being above the weekly SMA, potentially forming 76.2K as support. However, if the weekly SMA continues to get dragged down lower, which reasonably speaking it will, even if the price closes above it, that does not automatically guarantee that this is going to start sloping upward. It's more likely that it would start to consolidate, but it's still going to consolidate right at 76.2K, which means that any interaction there gives us less information, basically. It does not confirm support or resistance on either. If both of them are kissing, it's just not clear enough to really know what's going to happen next from that. So we have to, again, assume with our base case scenario that it's probably going to be something like this guy. And when is this? This is into the end of March, into April. So again, we are left translated, so it happened a little bit differently this time, but essentially same story, different year. And same thing over here. This is 2018. This is also the last time that Donald Trump was president, so fairly important. Slightly different in terms of the timing. In terms of, I believe we had our lows actually in February, and then a rise into March and April. And this is that same move, a move into the end of April that ends up starting to fail down the other way. Obviously, this time did not interact with the weekly SMA. It was just a failure. But pretty much every instance where we do have an interaction with it, it's a couple weeks of chop around the level, and then we fail it and continue down lower. So until proven otherwise, I still have to assume that that is what's going to happen. So let's talk about this other scenario of the price continuing to rise higher and higher. We're seeing some compression on the Bollinger Band on the weekly time frame now, not a ton of compression, but some compression, which would indicate a big move is coming. However, really we want to see this much compression, and we're still not quite there yet, although this is clearly sloping downward. This is starting to slope upward, so we may be on our way there. But that's pretty much what we have to pay attention to, is some point in the next 2-3 weeks, we're going to get confirmation of whether we need to give back the weekly SMA or whether we can continue to trend higher. I would assume that we are going to close this week above that weekly SMA. There was serious manipulation at the end of last week where we had touched it, and then bears came in and force and really pushed the price down. Bulls were still able to get us a favorable close above where we wanted to be, that 70.3K level that I talk about all the time. But functionally speaking, right now, what we would be waiting to see is confirmation of a close above the weekly SMA. And then we would need to wait basically 2 weeks to see, okay, well, is it continuing towards the 96K pivot, or is it struggling? I would imagine somewhere in here, between about 84 and 86K. I would imagine it's going to struggle. Like I said, with those downtrend anchored VWAPs. Pretty much the same story with this guy. This is the downtrend anchor VWAP. Pretty much same story, about 83K is that point. And those really act as magnets for the price. So functionally speaking, price is going to have a reaction to it, and it's either going to pull it towards the upper band, which is at about 98K, or it's going to have a strong reaction to that band and push it back towards the lower band, which is currently at about 68.4K. So that's what we're looking for, is a confirmation of this trend line to see, okay, do we need to break back below this downtrend line? Do we have permission to continue going above it? And then we will eventually retest this blue one, and that will give us confirmation of, oh, okay, are we breaking down further, or are we going to continue to the upside? Now, me personally, it's hard for me to believe that we are magically going to continue to the upside. The only example I can really give of that is, again, 2018, 2019. Who was the president? Donald Trump was the president. So I can see a world where we experience this guy just earlier, essentially, where we're still going to end up with some type of black swan event that brings prices back down to these lows, which functionally speaking for us, I think is probably going to be 64K. So in this instance, again, this hypothetical scenario that we somehow magically are able to continue to build momentum into, let's call it May, June, July. This is a long process. I would imagine at least one of those months we're going to have a significant pullback. But say for whatever reason we're able to continue towards 96, a close below 96 is going to be regarded as a sincere failure. I would imagine by that time the top band of the Bollinger Band will be lower as well, which means we would need to break that in order to even get the 96K pivot, which again is going to be regarded as a short the same way as any of these guys would be. So that's on a higher time frame. You can't really argue with a short that presents itself on the monthly time frame, or well, this is the weekly actually, but whatever. Same thing. It's hard to argue with those clear signs, just as this is a clear long entry that you would be very happy about if you took that. So we still have to assume that the trend is going to behave the same way, which would mean a failure of the weekly SMA at some point, I would say in the next 3 weeks, typically. We don't really have a ton of examples of that. We pretty much just have 2022 for a fairly obvious one, and 2018 for a similar circumstance, though not exact. And obviously no two cycles are exactly alike, but until proven otherwise, that's what I think is going to happen. I don't really have any reason to believe otherwise. But again, the anchor view up will tell me, based on us having a reaction to that. If you've been watching this channel for any period of time, we have reactions to those levels like all the time. It's super, super important. That's why I talk about them all the time. So me personally, to transition into the trading segment of the video, again, I'm looking for a solid place to close my perpetual trade. And I think I'm going to shift to scalp trades after this. I don't know that I want to have directional bias, I think, until after July. It is still my opinion that we have lower highs that are going to form in both April and July. Obviously, we've got like 8 more days in April to see whether that's true or not. Although I would already say it is true because we are at new highs in April. So already that part of what I've been saying for several months has been validated. It's just a matter of whether or not we're actually going to see a negative reaction to that or not. So how was I able to do this? How was I able to go from being basically 100% in loss at one point and not panicking, not like freaking out during that time period, to now being I think just below 100% in profit. I think I'm like 92% in profit right now or something like that. So I had initially bought a short here and I was correct. However, I thought we were going to have this over here. So I flipped it to a long, which is very silly. I don't have a rule set for randomly seeing a short entry and then deciding, oh, never mind, I'm going to trade the breakout instead. I don't have a rule set for that. So quite frankly, I deserve to lose money on this trade. I have not lost money on this trade, but I deserve to lose money on this trade. So what I ended up doing is I believe I bought back in, I think it was here, and probably again around here, just to lower my cost basis from about 74 to about 72. And that's why I am now sitting in pretty comfortable profits without really having to worry. And my main focus, and I know I talked about this with somebody in the comments in the last video, my main focus with these perpetual trades is not necessarily worrying about a stop loss. My main focus with the perpetual trades is being able to have access to the trend. You get paid for waiting and doing nothing. I absolutely could have panicked and sold in heavy loss and then traded my way out of that if I wanted to. I basically missed like 8 to 12 solid setups for scalps over the course of the last month because I chose to sit in this position instead of get out of it. But I would have had to, like, all of those trades basically would have just been paying myself back for being incorrect in the first place. Again, on a trade where I was correct. If I had just stayed in the short, I would have made like 130% of my money, which is fucked up. It's crazy that you're able to even do that. So me personally, it is still, I have a bullish bias until proven otherwise. And I'm going to get confirmation of that somewhere between 80K and 83.5K, at least for this trade. Like, I don't think you can really be that upset with going from being 90% in loss to being 100% in profit. Like, that's nuts. There's very few asset classes that are going to hand you that opportunity. It's been my experience when trading option contracts and meme coins that if you're wrong, you're going to lose your money. Whereas with these perpetual contracts, I was wrong, but I stuck to what the analysis was telling me. I doubled down on the position when it made sense to, instead of panic selling when my emotions told me to. And again, that's allowed me to go from being in significant loss to now being able to, dramatically increase the amount of money in the position, just by a factor of I have my levels, I have my historical analysis. Like I explained earlier on in the video, I was only able to call out this level because we've already seen this happen before. We've already seen this happen between 2024 or 2014, 2018, and 2022 in some way, shape, or form. It's not always identical, but it was enough for me to infer that we were going to see a rise into the end of April. And I've been very correct about that. Like and subscribe if you're enjoying my analysis. But that's pretty much what I would say for the perpetual specifically. I believe that the perpetual trades are better suited for maintaining long exposure to the trades. And I'll give you an example of why. Say that I had instead bought the futures contracts. Say I bought a futures contract here on Monday, March 16th, and I shorted it. Well, even though I'm correct, I have to close that contract by here. I got to close it. Now, in this particular aspect, that would have paid me very well. I would have been very happy with that. And now I got to open another one. And that would have been a clear long entry, not a short entry. But maybe, I wanted to take a short. And again, directionally speaking, I would not want to short here. I'll short up here, but directionally speaking, I would not want to short in any of these as an indication of the trend itself. For a scalp trade, absolutely. That is why I have built this strategy, is based around the probability that when we see candle breaks and sometimes wicks outside of either of the Bollinger Bands, I don't care if it's the top one or the bottom one. If it's the top one, that tells me to short. If it's the bottom one, that tells me to long. Very simple. We do not take long trades when the price is rising. Or what do we get? What do we get, everybody? We get to be in loss for a really long ass time. That's what happens when you try and trade the breakout in the direction of the breakout. It does not make any sense. You want to trade the counter trade, which in this particular example, one of my students did take the short yesterday, and now they're having to acknowledge that they're going to lose this trade. They're going to lose money, and it's just a matter of how much money do you want to lose, essentially, before they wait for a better level. So there are instances, and if we're just looking at it strictly, what I like to look for is these guys here. These are two candles that are kissing, that are outside of the Bollinger Bands. And even this guy, I'll take these guys because those candles, again, are kissing. We had a break of the Bollinger Band. You would probably want to take it, again, from the wick, which I would define as a silver star entry instead of a gold star entry. But pretty much any of these would have been sufficient scalp trades, not sufficient directional bias trades. And I like using the perpetuals as a directional bias trade. If I think about it really for this phase of my trading right now, I'm just learning how these work. I'm just learning how these work so I can continue to utilize this instead of feeling like I need to chase like meme coins or options or other things. Why would I have to do that? If the price of Bitcoin moves 10% and I'm able to profit 100% off of that, why the hell would I be looking to trade anything else? Feel free to leave the answer in the comment, because I don't understand it. Me personally, I would rather take way less trades, not have to look at a million different charts, just look at the Bitcoin chart and just be highly educated on which levels are actually the most important. And then the majority of the strategy, as I said, is it's defined probabilistically mostly around scalp trades. Like it's not always a guarantee that you're going to get this type of move from that scalp. You would have been totally happy with that, and then seeing a strong reaction to the SMA, which typically you're going to get something more like this. So you get your entry here, which that's a beautiful entry. I may have even taken that one now that I think about it. And you know, that's a clear invalidation, which means you close it. Now you close it in pretty decent profit at that point. I hate your sticky keys. Please do what I ask you. That's 30% on your money. Pretty great, you know, for you to be able to passively do that over the course of a day and a half. That's a very nice trade. However, the SMA would have invalidated that. It's the same thing for Fibonacci pivots. Sometimes Fibonacci pivots will also invalidate levels that seem very important. Oh wow, it's not even giving me older levels. Interesting. That seem very important, but you really kind of have to wait for clear confirmation of key levels in order for us to see, you know, where are we heading directionally. And I think that that's a combination of, I like the anchored VWAP for that because again, it's going to tell me kind of the momentum that we're carrying at the moment. And if we're above it, we're going to trend towards the middle. If we are below it, then we're going to continue to chop until we're able to interact with it again. But those prices kind of act as magnets in a very similar way to the SMA acting like a magnet. You know, the price will inevitably return back to the SMA at some point. And it's the same case now. The price will inevitably return back to 76.2K at some point. Not just because that's the 4-hour SMA, but because that's the higher time frame Fibonacci pivot that we talk about for the weekly and monthly all the time. So me personally, again, what I'm looking for is a rise into this 80 to 83.5K level, at which point I will have to consider whether I want to close the trade or not. I think 120% in profit is more than enough to exit the position and then kind of reconsider what I want to chase next. And quite frankly, you know, if I'm really thinking about it from an opportunity cost perspective, again, I missed like 8 to 10 setups in here. Now, I don't know the exact amount of each of these moves, but say that these moves, go away, sticky keys, I hate you. Say that each of these moves are about 3%, you know, functionally speaking, that's 240% that I missed out on by only being directionally biased one way. So I think this functionally comes down to how I was trying to explain it the other day is I think of perpetual contracts kind of as like a variable yield, high interest savings account, where all that I'm really doing is I want to increase the dollar amount that I can have to leverage trend exposure. Now, I feel comfortable doing that because as you've watched earlier in the video and in every other video that I talk about, I know what I'm talking about in terms of the technical analysis. I enjoy watching other people's videos to see what their opinions are as well, but more often than not, I do not require it in order to be able to make solid decisions about what I believe the price is going to do, just simply by paying attention to what the indicators are telling me. As well as simple tools like the anchored VWAP and the anchored volume profile. So, you know, psychologically speaking, it is hard for me to believe that all of these people are going to see price rise right up to that level, and that some of those people are not going to sell. You know, that some of those people are not going to see, oh my God, stocks and gold are still rising by a ton, and like I think I got to get out of this Bitcoin thing and jump over to this stock train, jump over to this gold train. Especially if we see signs of weakness. If we get a rise up to here and it starts dropping hard in the opposite direction, I would expect that some of this part of the volume profile is going to thin out. And we're still kind of waiting for confirmation of this. And then just broadly speaking, to jump back to the higher time frame for a moment, a 4-year cycle is really not over until everybody's in pain. And these are all the ETF buyers that entered, and they haven't really been in pain. They were in pain for a short period of time, but a period of whatever, like 8 weeks, is not really historically what we would expect for someone who bought in the halving year. It's typically a considerably longer amount of time that those people are going to have to wait. In this instance, it's a little bit different. So we didn't have such a significant rise early on. Functionally speaking, if 2020 was similar to 2024, then we would have expected a rise in here. And then that's where a drop down to those levels would have been more prevalent. However, we don't really know if the ETF buyers are going to functionally act as a hard support limit, where those people are retirees and they're not interested in selling their position. They're just interested in waiting and adding more to it. And the anchored volume profile does speak to that a bit, that a lot of people have stepped in at these levels. In fact, the most that they've stepped in since the lows in 2022 specifically. This is the highest amount of, this is still the point of control. This is the highest individual candle. But we have seen a lot of pressure return to the market in the last, I would say, again, some of this is 2024, some of this is now. So we really just need the conviction of these individuals to outlast whatever these individuals decide they're going to do. Now, I'm not going to ramble about it in this video, but I've talked about the stablecoins in a number of other videos. It is hard for me to believe that until the stablecoins enter the market that we're going to see a meteoric rise. It's more likely to be that we see some significant failures of the price. So I'm kind of agnostic as to exactly where those levels are. If the price is going to tell me when I get out between 80 and 83.5K, if it's going to tell me to continue longing after that, so be it. It is what it is. I close my trade in profit. I'll look for the next solid long entry, which I would imagine is probably going to be a retest, like I said, of 76.2K if we are going to actually form that as support. But directionally speaking, I still assume that we're going to be bearish at that time period. We don't have any historical context to prove otherwise. We still have a lot of global uncertainty, and this is a supply and demand asset that trades 24/7, which means that when there is significant uncertainty, this is one of the first things to sell off. So me personally, what I am looking for is evidence that the trend has shifted from bullish to strong resistance. And then at that point, I will likely take a short scalp trade from here to wherever price trends back to, which again, my gut instinct is about 76.2K. But time will tell. We'll know that, I would say, within the next couple weeks. So I don't know if I'm going to tell you to watch this before April 24th now. Maybe I'll shift it to sometime in May that I'm saying in the headline. But I would expect that this part of the rally, it will be pretty clear if it's over or if we're going to have the room to continue higher based upon the reaction to 83.5K and 80K. Until we have that, we're kind of just waiting to go higher. So again, if we're thinking about our proper trade entries, none of these are really what we want to see. That's not what you want to see for a short. That is not what you want to see for a short. That is not what you want to see for a short. This is the first one, actually, that this could be taken as a short. And again, we got to about 79.5K. So that is possible that 80K is functionally reacting as resistance right now, which we'll know more in an hour and a half. And then I would say, like I said, another probably 3 or 4 4-hour candles after that will really tell us the direction of the trend moving forward. So, oh my God, yawning. Of course, I'll be back on Friday with another update. I would imagine, like I said, that the weekly SMA is going to get pulled down below the Fibonacci pivot on Sunday. It's possible again that we curve and that we stay above it, but that is my baseline assumption, is that this guy is just going to trend lower, which makes the reaction to these levels less important, basically. It gives us less confirmation of support or resistance because they're too close to have confirmation of which level is the one that price is actually respecting or disrespecting. So that's pretty much it for this video. I will see you on Friday. Like and subscribe. Let me know if you have any questions down in the comments below. Have a wonderful rest of your day, everyone.